He did everything right. He paid every bill on time. He never missed a payment. He never maxed out his cards. He never borrowed money he couldn't repay. On paper, he was the perfect borrower. Banks should have loved him, but they didn't. And that's where the story really begins. Because what most people don't understand is this. The credit system is not designed to reward responsibility. It is designed to manage risk. And sometimes the most responsible people are the biggest risk of all. At first, nothing felt wrong. His credit score was high, higher than most people he knew, numbers that made financial advisors nod in approval. Perfect. That number gave him confidence. It made him feel safe, like he had finally done something right in a world that constantly feels unstable. He believed that number meant protection. He was wrong. No one ever tells you this part. A credit score is not a moral score. It does not measure honesty, discipline, or effort. It measures behavior, patterns, predictability, profit potential. And when your behavior changes, even for the right reasons, the system notices. Quietly, coldly, without warning. It started small, a notification he almost ignored, a routine message from a bank he'd been with for years. Your account terms have been updated. No explanation, no apology, just a line of text and a link to fine print. He clicked it. Nothing made sense. Lower limits, stricter conditions, new risk language he had never seen before. He assumed it was a mistake. After all, why would a bank tighten restrictions on a customer who never caused problems? That question alone shows how little most people understand about how this system works. Banks don't want good customers. They want predictable ones. They want people who borrow, repay, borrow again. People who carry balances. People who generate interest. A customer who pays everything off early? A customer who stops borrowing? A customer who becomes financially independent? That's not loyalty. That's exit behavior. And exit behavior triggers alarms. What he didn't know was that his silence had become suspicious. No new loans, no fresh debt, no revolving balances. To him, that meant freedom. To the system, it meant uncertainty. And uncertainty is the enemy of profit. Here's the part that makes people uncomfortable. The credit system does not punish failure the way people think it does. It punishes non-participation. When you stop feeding the machine recalculates your value, not as a human being, as a data point. A few weeks later, another message arrived. This time, it was more direct. A credit card limit reduction. No missed payments, no warnings, no explanation, just a smaller number. He felt something shift. Not panic yet, but confusion. And confusion is dangerous because it makes you question your instincts. He called customer service, waited, transferred, placed on hold. The voice on the other end was calm, polite, scripted. "There's no issue with your account," they said. "It's a system decision." A system decision. No human explanation, no appeal, no accountability. Just an invisible mechanism deciding his financial worth. This is where most people make a mistake. They think the credit system is reactive, that something bad must happen first, a missed payment, a default, a mistake. But the truth is far darker. The system is predictive. It doesn't wait for problems, it anticipates them. And sometimes it anticipates them incorrectly. But that doesn't matter, because once you are flagged, the process has already begun.
The real damage didn't happen all at once. It happened quietly, One closed account here, one reduced limit there, a loan application suddenly under review. Nothing dramatic, just enough friction to slow him down, to make him doubt himself, to make him feel smaller. He checked his credit score again. Still high. That's the cruelest part. The number stayed strong while the doors started closing. Because the score is not the whole system, it's just the mask. Behind it are risk models, internal scores, behavioral flags that no consumer ever sees. And once those internal numbers change, your visible score becomes meaningless. This is where the illusion breaks. People believe a high credit score means security. It doesn't. It means temporary permission. Permission that can be revoked at any moment, without explanation, without negotiation. He tried to adjust, opened a small balance, used his cards more, played the game again. But the system had already reclassified him from ideal participant to low engagement risk. And once that label is applied, it's almost impossible to remove. This is the secret no one talks about. The credit system is not built for people who want stability. It's built for people who stay dependent. The moment you show signs of independence, the system responds defensively, not aggressively, defensively. Think about that. A system that claims to measure trust but reacts with fear when you no longer need it. At night, he started thinking differently, not about money, about control, about how quietly power operates in modern life. No guards, no threats, no force, just numbers, policies, and automated decisions. And the worst part? There was no villain, no one to blame, no single moment to point to and say, that's when it went wrong. Because the system isn't broken, it's working exactly as designed. Most people never notice this because most people never leave the cycle. They borrow, they repay, they borrow again. The system recognizes them, understands them, keeps the doors open. But the moment you step outside that loop, you become unpredictable, and unpredictability is unacceptable. This is not a warning. This is not advice. This is simply the reality of how modern credit works. A system that does not care about your intentions, only your patterns. And this is just the beginning, because once the system decides you are no longer useful, it doesn't attack you. It withdraws from you, slowly, silently, until one day you realize something terrifying. You didn't lose control all at once. You lost it piece by piece. What happens next is the part no one prepares you for. Because the credit system does not end relationships loudly, it fades them out. No letters saying you're done. No dramatic rejection. No clear moment of collapse. Just silence. And silence is the most powerful form of control. At first, it feels like coincidence. A loan offer that never arrives, a promotion that quietly disappears from your inbox, a pre-approved message that suddenly stops showing up. You tell yourself it's nothing. Everyone does. That's how the system survives, by making people doubt their own perception. He began noticing the pattern too late. When he applied for a simple credit product, something routine, the response wasn't a rejection. It was worse. Application under review. No timeline, no clarity, no human contact, just waiting. Waiting forces compliance. It makes people anxious. It makes them careful. It makes them obedient. This is how modern systems discipline behavior. Not with punishment, with uncertainty. Behind the scenes, something had changed. Not his public credit score, but his internal profile. Every bank has one. Every lender has one. A private score built on things you never see. How often you borrow,
how much profit you generate, how predictable your behavior is, how dependent you appear. This score is never shared. You can't request it, you can't dispute it, you can't correct it. And it matters far more than the number you obsess over. This is the truth people don't want to hear. Your visible credit score is marketing. Your internal risk score is reality. He was no longer valuable, not because he was dangerous, but because he was finished. Finished borrowing, finished revolving debt, finished playing the role. And systems don't reward exits, they contain them. The strangest part, nothing technically went wrong. No laws were broken, no policies violated, no mistakes made. The system simply decided this user no longer fits the model. And when a system decides that, there is no appeal, because you're not arguing with a person, you're arguing with logic, cold, statistical, emotionless. People like to believe there's always someone in charge, someone you can call, someone you can explain yourself to. That belief is comforting. It's also false. When he tried to push back, the answers became emptier. We can't see that information. It's automatically generated. There's no manual override. Each sentence was technically true, and together they formed a perfect wall.
This is where most people break. Not financially, psychologically, because humans are not designed to negotiate with systems that don't listen. He began adjusting his behavior again, using credit more frequently, carrying balances longer, re-entering the cycle he had tried to escape. But systems don't forgive quickly. Once a pattern breaks, trust does not return easily. Here's another uncomfortable truth. The credit system does not believe in redemption. It believes in consistency. If you change, you become a risk, even if the change is positive, even if the change is healthy. This is why so many people stay trapped, not because they're irresponsible, but because they're afraid of disappearing. He started to understand something deeper. This system was never built to help people become free. It was built to help institutions stay stable. Individual freedom is a side effect, not a goal. Think about it. A financially independent person borrows less, needs fewer products, generates less profit, requires less control. From a system perspective, that person is inefficient, and inefficient users don't get optimized. They get ignored. The most disturbing realization came slowly. The system wasn't attacking him. It was withdrawing recognition, like a social network that stops showing your posts, like an algorithm that quietly deprioritizes your existence. You're still there, you just don't matter anymore. This is how modern power works, not through force, through relevance. At some point, he stopped checking his credit score. It no longer meant anything. The number stayed high, but the access was gone, and access is the only thing that matters. This is where the story stops being about credit and starts being about society, because the same logic exists everywhere: employment, healthcare, housing, visibility. Systems reward those who remain useful. They marginalize those who don't. The scariest part? You're never told when you cross the line. There's no notification that says, you are now less important. You just feel it. Opportunities dry up, options narrow, choices disappear, and people blame themselves. They always do. But this was never about personal failure. It was about design. A design that quietly conditions behavior. A design that discourages independence. A design that equates worth with participation. The credit system doesn't ask, are you responsible? It asks, are you profitable? And those are very different questions. Most people will never hear this explained, because explaining it weakens the illusion, and illusions are necessary for systems.